Okay, so this is how I like to trade Forex. I'm based in the UK and I like to trade Forex via a spread betting account. It's just always the way I've done it over the last 10 years, and I just find it the easiest way to trade Forex. But a lot of the principles and strategies I'll be showing you can be applied to any traditional broker. Now in the UK there are several different spread betting companies that you can use, and this isn't a recommendation, this just happens to be the one that I find the easiest to use. And as I said, I started with it approximately 10 years ago, and on and off I've been trading with them, and if it ain't broke don't fix it, so I've just stuck with them. Now going on to the currencies that I actually trade, I tend to stick here, as you can see on the screen, on these top few, what are known as the major currencies. So we start off with the pound US, known as the cable, all the way down to the pound euro. And in here, if I click on this, if you go to the right hand screen here, this shows you the US dollar basket. I have traded this before, but I tend to stick to individual currencies. So the US dollar basket is a basket of currencies traded against the US dollar. So part of my strategy is I will look at how the US dollar basket is performing. So if I'm trading a currency against the US dollar, which a lot of the time I am, then I'll look to see how it's trading against the majority of currencies. Now look in here, so ignore the lines for the moment, but if you look, each of these candlesticks or bars is approximately a day's trading. I primarily like to trade off the daily chart, which I'll explain later. So each of these bars is a day's trading. And as you can see, since the beginning of the year it's been in this uptrend. So the green bars or candlesticks means it's gone up in that day's trading, and red it's gone down. So as you can see, and on this green bar here, the wick is the highest price it reached, and at the bottom of the wick it's the lowest price it reached during that trading day. It's just cooling off now towards the end. It's the 21st of February 2024, and it's just starting to cool off towards the end here. But as you can see, it's been in an uptrend during most of the year, which is handy for my trade that I'll show you in a minute. But going back to the cable, I have traded the cable before. It's probably the most popular currency to trade, pound US, but I've had my fingers burnt with it, and just because it's the most popular doesn't necessarily mean it's most profitable. And yet again, this is the daily chart, and if you compare it to what we just saw, the US dollar basket, you can see it's quite erratic, which is handy if you're day trading, because if you're day trading you're getting in and out, and there's probably opportunities to make money. So if I click on here, obviously all spread betting accounts and brokers, the panels will be slightly different, see, but we can come down to 4 hours. So 4 hours, it looks a little bit smoother there. Right down to 10 minutes. So 10 minutes, this is what, from 7 to 11 today. I mean, you can go down to 10 seconds. It's really quick. And then go back all the way up to monthly. So yeah, if I stick back to the daily chart, you can see it's a lot more erratic. So I tend to stay away from the most popular one. For me personally, I find it very difficult to trade, even though it's the most popular. So you've got the Euro, US, Japan, I've traded, Euro Pound, US Canadian, and there's the dollar basket, pound euro. So I stick to these majors because there's more liquidity, obviously more people are trading them, so the spreads, the difference between the sell and the buy is a lot less. So if you look at the spot, even though I tend to trade and not close, I don't close within a day. So day traders will close within maybe a few hours or even less than that, but they'll certainly close within the day. I tend to let it carry forward. Now there is a forward rate here, and that's 12.6175 to sell, buys 12.628. So if you look at the spread, you're looking at 10 points. Now when you're spread betting, what you're doing is you're betting per point. So that 10 points, if you're betting £1 a point, that 10 points means already when you're taking out the trade, you're being charged £10. If I go back to the spot, this is the spot here, 12,616.1 to 12,17. It's approximately just under 1. So 1 pip or 1 point, however you want to call it, and that's only going to cost you £1. Obviously though, if I keep it over the day into the next day's trading, sometimes there is going to be an overnight fee, and that will vary on the prices that it's trading at that particular time. Sometimes it can work in your favour, you get an interest charge, or sometimes it's taken off. And I've been looking into this, and to be honest, I'd rather take the overnight charges rather than the forward charge, because the forward charge, you're going forward to March 24. I mean, now we're getting close to March 24, but I'll show you the trade I took in a minute, and I took it out of Jan 10th, so I'm not necessarily going to be going all the way forward to March. So I don't like to incur that expense at the beginning. So I tend to trade off the spot, even though I'm not going to be closing it within the day. That's highly unlikely. So the trade I'm talking about, which I'm currently on at the moment, is the Aussie US. And as I said, the dollar basket was showing showing the US dollar going up. Now, as I'm trading, you always trade the first currency against the second. So I'm trading the Aussie against the US. Now, if the US is generally going up against those basket of currencies, that means here, as I'm trading the Aussie US, there's a good chance the Aussie is coming down against the US, because obviously the US is going up. Remember, it's the second currency in this one. So as you can see, the first currency in here is we're trading the Aussie, and as you can see, the Aussie is coming down. Don't worry about the lines at the moment. Is coming down against the US, and I can show you on the larger chart here. As you can see, it was going up, but if I show you, I'll show you where I've come in the trade, and I'll explain to you, I'll just get the pen down, why I took that particular trade. So I've come in here, there's a little dot there, you probably can't see it, there's a line going across, and I came in there, and as you can see, it's been going down, down, down. You might ask why I didn't come in at the top here, because obviously it's been coming down from there. I didn't know this point here was its peak. You can never get right in exactly at the top or the bottom of the market. Okay, some people would say this is known as resistance here. In other words, no more people are willing to buy. It's hit its resistance here. People are going to start selling. You can do that, and I do sometimes look at resistance and support, which I'll explain later. But the way I look at it is I use two indicators. That's literally, and if you try and keep it simple, sometimes it works better than trying to be more complicated on these matters. So I use two indicators, and these are known as the moving averages. So these lines here, these are the moving averages. And the moving averages just take the average for a set period of time. So the average price over a set period of time. Common one is the 200 EMA, but you go everything right down to the 5 EMA. And a lot of traders, they'll use these as indicators. Because basically I'm a trend trader, so I'm looking at trends. As you can see, this is coming down, and this is from beginning of the year. Remember, each bar is a day's trade, and you can see it's generally a trend is coming down. So if you didn't have these lines, you didn't know anything about trading, you'd be looking at the Aussie dollar coming down against the US, and that ties in with the US dollar basket, which seems to be the dollars going up. So most currencies against it are coming down. So the trend is it's coming down, but I use the moving averages to determine that trade. You get two types of moving average. So you get the simple moving average, or the EMA. Sorry, get my teeth in the EMA, which is the exponential moving average. The exponential moving average is one I use, which tends to reflect the more updated current prices. And what you do is you use two moving averages. So this black line here, this is the the shorter time frame moving average, and this is the gold is the longer moving average. So the reason I've sold here is because you see the black line, which is the shorter, has just crossed over this one here, the longer term moving average, and that tells me that the trend has changed. The moving average price has come below the longer term average price, so that indicates to me it's a sell, and I would go short and I would sell, and that's what I've did. And I would set a stop. And I've learned from experience it's always a good idea to put a stop in, and my stop was around here. I think that's the 3rd of June, and I went in at the 10th, so it's approximately a week away. Now if I was wrong and this did go up, that black line would go up there, and that would indicate to me that the trade has finished. In other words, it's turned the other way, and I could maybe go long, but it hasn't. As you can see, it's starting to come down. So my stop was here, and as it started to go into profit, I moved my stop to break even. So it started to come down to about here. Stop would be moving to break even as I get weeks away. And then now you can see there's a dotted line here. I now have moved that break even stop to there. Okay, and this is approximately in line with that. And if we talk about resistance, you can see there's a line of where the wicks, the top of the prices, have hit that but haven't broken through. In fact, they've broken through on this one here, which is a good approximately about a week away, and that's when they've broken through. So if the price this is where we are at the moment, and if the price hits that, then that black line will have gone above, this black line will have gone above the gold line. So my stop's in the right place, and in fact that stop is it's 90 points away from where I opened, and I'm currently trading at £4 a point, and obviously it depends on your account size, but £4 a point is enough for me, because when I'm taking out a trade I'm always thinking of risk management. I'm always banking on the fact that this trade highly likely it could lose. I don't believe you can get 80 to 90% success rate with systems, and even if you do, it's not about the strike rate, it's about your profitability. And I can have 7 trades and 5 of them could lose, but it's the two big ones that will count and will make back my losses and even make me a profit. And that's what you should be thinking of. You should be thinking, well, a lot of my trades are going to lose, but as long as you keep your risk low, which is what I did, and now I'm actually in profit. So if it closes out here, it'd be £360, which is just over the 1 hour return. So our returns means I risked approximately £300. I'm going to get just over £300, £360 back. So that's not an astronomical return, but it's a return, it's a profit. And it looks, if you look at here now, the black line is touching it today on the 21st of Feb, but you don't close out when it's touching. You wait. I've got to wait until this goes right up. So when that black line crosses, so you're looking here, and the black line crosses the golden one. That is when. So at the moment, you can see, and there's a little wick here where the price has reached but it's come back down again. So if we just have a look at that, if I just move it across, right, so we can see here that it's touching, but it hasn't gone fully across. And what we're waiting for is, I'm waiting for the black line to go. If I just show you again, I'm waiting for that black line to make a clear break and go up. And if it hits here, then I know I'm guaranteed at least £360 to 90 points. But, you know, it might just go above the line here, just under that, and I'll get even more profit. Or it might turn back again and come down here, and I've had that happen before. So this is a mechanical system. I'm not judging when I think that is going to go across. You know, I could anticipate it now and think, okay, this is about to cross the line. Why don't I take profit? Or why didn't I take profit down here? I was talking earlier about resistance and support. A lot of traders might look at that as support. They might even have indicators for support and then take profit here. But I don't anticipate anything. And as I say, you can never get in exactly at the top and bottom of the market. So you can't get all of the trade. But if you take a proportion of it, then you know you're doing okay. So you know there are loads of indicators you can use. Those are basically the two I use. But if I click on here and say all brokers are differently, but I click on that one there, and most brokers will have all of these indicators here. And you know there's various ones you can put on. Donchian channel, MACD. If you traded before, many of you will know these different ones. MACD got the moving average there, and there's things like pivot points. There's various different ones. You can choose RSI, ease of movement. That's so here we've got the Donchian channel, which literally shows you over a set period of time that the highs and lows. So you can see it's moving within that channel. I mean, you know, some traders put all these on the charts, and you just get a complicated chart. And to me, I just found it confusing over the years to have all these different indicators on. And some traders will put these on thinking that they're trading more efficiently and better, and they'll have several screens on, and you know, look at me, I'm the trader. But at the end of the day, it's not so much more to do with the system, it's to do with the mindset. Two traders can have exactly the same system. If one trader is experienced, he'll think more about risk management. He or she will think more about risk management rather than thinking, oh, I could have got more on that trade, or you know, this is a certainty. You know, you've got to play the odds, the probabilities, and use the indicators to narrow down your probabilities, but nothing's 100% probability. And you're just trying to come out on top. You're just trying to find an edge to your trading. And there are so many different systems. And, you know, if we all had the same system, then there wouldn't be a market. Because it's a zero-sum game. Someone has to buy, someone has to sell. Many people watching this will look at that and say it's far too simple, it can't work. Okay, that's fine, that's your opinion. And as I say, we all have different opinions on it. And it doesn't win all the time. It's not an 80-90% success rate. I found it works for me. There is another indicator I sometimes use. I sometimes look at the market data. So you probably heard, or if you read it at the top, you know, 69% of retail investors, certainly on this platform, they say lose money. I mean, you can look at the client sentiment. To the moment, it's 60% long. So it's just more in favour. people are thinking that it's going to go long, so more people are buying this particular trade and going long. And I'm taking a contrarian view, thinking, well, if 60% are going long, I won't go with the herd, I'll go the other way. But I wouldn't just base my, trading plan on just client sentiment. As I say, I use the 2 moving averages here. Look at market data. I look at the US dollar basket to give me an idea. I sometimes also look at, so even though I work on the daily chart, I sometimes look at monthly as well. And as you can see, this is the top of there is about 2021, and as you can see, it's been coming down all the time, which is what I'm on short. So that gives me a good indication that the trade should be short still. I mean, obviously it'll eventually turn, and as you can see, that's since the beginning of this year it's been coming down. That's the weekly, and we've got daily, and then I can even go down to 4 hours. So 4 hours it's been coming down today, as you can see here. I used to trade the 4-hourly chart, but as you can see with these moving averages, obviously you could change the moving averages, but it's going up and down, up and down, up and down. I was in and out far too often, and that's the thing. If you use a shorter time frame, 4 hours isn't too bad, but if you use an hourly, you've got to be checking on it every single hour. I mean, you can put stops in to guarantee, but this is the hourly, and so you basically just come out a bit there, you've come out there, that's not too bad there, but you have got to be checking on it every hour. See, there's a big drop in that hour. Look at that red candlestick there, it's come well down, and you think, okay, it's going to go on, but then it's come straight back up again. So the hourly, you really got to be looking at your screen all the time. And to be honest, people don't realise this. Most of the effective trading, it's a bit like investing, is really just letting the system get on with it and not keep checking it every 5 minutes, which in my opinion only comes with experience. Go back to the daily there. My opinion only comes with experience, and I can't teach you that. I can show you what I do and the mistakes that I've made and what I've learned, and that's all I can do. There are many fancy systems people are showing you on YouTube, and if it works for them, fine, but at the end of the day, I can only give you my opinion. This isn't financial advice, this is just my opinion, just showing you what I do. I'm not saying you should do this, and a lot of you might disagree with the way I do it, but it's it's the way I trade, and I find it can make me money, it cuts my losses, and at the end of the day, if I'm making money with it, then that's all that matters. And as I say, we all have different opinions on the best way to trade, and also it depends on your trading style. If you want to be a day trader, for example, if you're doing this full time, then maybe you want to go down to, well, that's 2 minutes, that's very quick. A lot of day traders will do, for example, maybe a 5 minutes, or what we put here. So yes, that's 2 minutes. That's very quick, and you can be in and out, and maybe make some money that way. But for me, that's not for me. I just like to check it daily, and you can see it's coming in and out. But there are many opportunities, but bear in mind, shorter time frames, you've got to keep an eye on it. I find it a lot more stressful. I find there's too much noise. I'd just rather have a system. At the end of the day, it's all about a lifestyle. If you can make money trading, and it's an easy, simple system where you're not getting stressed out, then surely that's a better way to trade. Unless you're looking for excitement. If you're looking for excitement, then fine, but you're not going to make money, and maybe look at something else. But certainly if you want to make money, it's not exciting. Certainly my system isn't exciting. It's simple, it's boring, but it makes me money. And as I say, on this trade here, we'll see what happens. It looks like it's probably going to be closed out later today, or probably it'll be tomorrow, once the day's bar has gone through. And if it has, I've made profit. You know, what profit I make will depend whether it hits my stop or not. But whatever happens, I've made profit. At the end of the day, this is what this is all about. It's about making money. And, you know, so I'm going to win either way on this particular trade. So we'll see what happens, and I'll show you in the next video how much profit I made. So thank you very much for watching. Cheers.